Jet Airways, the debt troubles and the subsequent grounding of aircraft have hurt the overall growth of the industry in March. But remember, there are conversations that go beyond Jet Airways and come to the aviation sector at large, because competitors have made the most of the situation to occupy the space vacated by Jet. Soumeet Sarkar is standing by with what the DGCA data has thrown up. If there ever was the data that one needed to monitor and see who has benefited and who hasn't, this is the data, Soumeet.
Well, yes, actually, if you see for the quarter ended March, the domestic passenger growth rate in India was the lowest in the last 5 years, from an average passenger growth rate of close to 19% in the last 3 years. In the fourth quarter of financial year 2019, the passenger growth rate has dropped to 4.9% because Jet Airways and SpiceJet had to ground nearly 50 planes in this quarter. Now, Jet Airways had to do it because of the non-payment to lessors, while SpiceJet was asked by DGCA to ground aircraft due to the concerns related to 737 MAX 737-800. Now, for the month of March, if you see, the passenger growth rate compared to last year was largely flat, and among the major airlines, Indigo stood out once again. Indigo's passenger growth rate was 19% compared to last year, while that of Go Air was around 10.5%. SpiceJet's passenger growth rate was lower at 7.3% due to grounding of aircraft. And for Vistara and Air Asia, if you see, the passenger growth rate was 11% and 31%, while that for Air India, the passenger growth rate compared to last year was -2%. Now, for the Jet Group, if you see, which has recently shut its operations, the passenger growth rate was -65.2% because of this grounding, and the market share also slipped to 5.8% from close to 10% in the last month, that is February 2019. Now, on the market share front, if you know, on the passenger load factor, which is also the measure of capacity utilization, on that front, if you see, due to this drop in passenger growth rate, the passenger load factor for all the major airlines have fallen. For Indigo, it has come down by nearly 300 basis points to 86%, and this is, I guess, the this is the 8th consecutive quarter where the company has seen a drop in its passenger load factor compared to last year. Now, for SpiceJet, if you see, though they have been able to maintain a 90% plus passenger load factor for the 47th consecutive month, the passenger load factor compared to last year has dropped again for the 10th consecutive month. Now, in this month compared to last year, it has dropped by nearly 200 basis points to 93%. Air India and Vistara also saw a drop of close to 140 to 280 basis points in the passenger load factor, while that of Go Air and Air Asia, it has increased by around 340 basis points and 550 basis points compared to last year. Now, the market share front, if you see, India's largest airline, that is Indigo, has just got bigger. The market share has increased to 46.9% now from close to 43% in the last month. Now, this is the largest ever market share that Indigo has captured in the domestic market. Now, if you see, other than Indigo, the other company that was able to gain market share was Go Air. Its market share increased to 9.9%, while that of Air Vistara and Air Asia, if you see, their market share also increased to 10.1%. As I included in this others part, so their market share has increased to 10.1% from 9% in the last month, while that of SpiceJet has remained stable at around 13.6%. And as pointed out earlier, Jet Airways market share has come down to 5.8%, while that of Air India has remained stable at close to 13.1% in the month of March 2019.
Soumeet, the interesting bit is I think investors in aviation companies might be happy because for long in 2018 they were argued that there's no need for such high utilization levels or passenger numbers. Let those utilization levels come off, but let fares move up, and that's what's happened in Jan to Feb and March, right? That
exactly.
The occupancy rates have come off, but fares have moved up.
Exactly, the fares have moved up, and that will result into a good profitability for the aviation companies in the fourth quarter, especially for SpiceJet and Indigo, because if you see, the passenger growth rate is still above the industry average, and there has been a hike in the ticket prices. So if you see, compared to last quarter or previous year also, the profitability is expected to be good because of this higher ticket prices that we had seen in the fourth quarter of financial year 2019.
Maybe that explains why the stocks are doing what they are doing, aside of course, the sentimental factors attached. Soumeet, thanks so much for putting that into perspective.